Hey guys, it's Market Update. This is the best start to a halving cycle ever. According to this tweet, cycle 2 is up 10% at this time. We're now up 11%. We also have central banks around the world cutting interest rates. How is that going to affect Bitcoin? It's not positive all the time, but actually most of the time it is. We'll have a look at the data. So we are essentially at all-time highs in a bullish ascending triangle pattern. I've put the consolidation patterns for this bull market at all of these points, as you can see here. We are now in a massive expansion in price where you get consolidations or drawdowns, you get sellers that take profits, and then you get the next expansion higher. So that is a bull market. And we've been in this now for about 73 weeks. But we're going on further because we're nowhere near the end of this bull cycle, in my opinion. You can see the macro cycle, the central bank cycle is nowhere near its peak in terms of bullishness, right, for risk assets, weakness for fiat currencies. So we had these consolidations at the start where people were a little bit wary, right? The attention wasn't there, broke through the long-term moving average. And now we're actually getting a little bit more volatile, which is what happens in bull markets, and the drawdowns, but the expansion every time, just going into these resistance zones, finding sellers, finding where people want to take profits. But you can just feel the buyers in the market each and every time, pushing us higher, higher highs, higher lows each time, right? It's a very, very bullish chart. If you want to read charts, it just feels like buyers are in the market. And yes, you get these periods of digestion where you get bid up the price. If you want something, you bid up the price, you find the sellers, you get all their stuff, and then you move on to the next price, right? That's what the market is doing right now. So this is a great chart for Bitcoin. Crypto is going through a little bit of a digestion, right? Altcoins, a lot of sellers here, you got prices moving up, but generally it's a very, very bullish chart for Bitcoin, right? Because we're seeing buyers coming in saying, I want Bitcoin, I'm going to move the price up. So yes, sellers come in, you get these digestion periods. It's a very, very bullish chart, and it's got a reason for it, and that's because central banks are starting to ease. So we'll go through that now. If you do trade, Bybit deposit bonus down in the description up to $30,000. I trade on here, and you can get up to 30K if you deposit and trade on there. You can check the link for the details below. The best start to a halving cycle ever, which is down to the ETFs and the attention it's getting, but it shows you how much volatility Bitcoin still has. That's a good thing. We need volatility. If there's no volatility, there's no returns. So the drawdowns that we get and the bear markets, they are the opportunity. And of course, that happens to the upside as well. It's really important that we have that. So these are all of the halving cycles here. You can see this black line right here. That's the current halving cycle. Absolutely tiny. We've got a long way to go for the halving cycle. It's not just the halving, right? The macro cycle. Central banks are just starting to ease right now. So there's a long way to go for that cycle to play out. So every cycle is essentially in this chart. I believe Bitcoin is the pricing signal for pretty much everything. And we'll talk about that a little bit more in this video because, look, it's great when the price goes up and we're valuing things in dollars or whatever else. But really, Bitcoin is the price. You need to measure everything priced in Bitcoin, not Bitcoin priced in dollars. And there's a reason for that, which I'll explain. But this halving cycle is going very well, and there's clearly a lot of interest. The amount of money that could flow into BTC now, and therefore crypto, obviously as it cascades down, is bigger than ever before. The ETFs are huge, not just because of the actual flows that can come in now, but the US has put the green light on and said, okay, we're bringing it on. And so everyone can now make those purchasing decisions. It's just bigger than anyone can think of, the ETFs. This is global liquidity in M2 money supply around the world, just starting to break out. I've said this many times before, but you can see the correlation here between money supply as it expands and contracts and the Bitcoin price. Huge expansion here is the previous bull market, big drawdown in the previous bear market, which is going into an expansion now again. So money supply will always increase. Currency units, fiat currency units must always increase because it's a credit-based system. It's a credit-based expansionary system That's the only thing it can do, is expand or collapse to zero. So it must expand because we can't have it collapse to zero. So that's going to continue to go up. So we know that. Bitcoin's going to price that in, but that's not actual returns, right? That's just, you've got one currency expanding and debasing itself and the other isn't. That's great if we use Bitcoin as money, but we obviously want returns over and above that as well, right? Well, we're in a phase, the growth phase of Bitcoin, where it's just being adopted. So when Bitcoin matures out, then it's going to price in the debasement of currency, but it may not have a ton of like extra growth above that. So eventually, you're going to be in Bitcoin and maybe it's pricing in debasement, but there's going to be way more other opportunities to make higher returns than that in other things, for sure. But if you have a money that you need to save, right, and you need to save that money and you're not wanting to invest it in something riskier, then Bitcoin is the option and not fiat currency. We're going to be volatile though, because central banks are cutting. And that means a lot of opinions are going to be coming out about why are they cutting, how fast are they cutting, how many cuts. Again, it's all noise. Like, it doesn't matter, because you have a credit-based currency unit system that will debase itself against this hard asset. So which one do you want to be in? It's literally as simple as that's the choice, right? Do you want to save in a currency that's being debased? That's actually what it's designed to do, right? Banks create credit and debase the currency. They increase the amount of currency units, right? So you can't save in that. So what else can you save in? Bitcoin, a hard asset, as money. In any case, in the short term, central banks are going to try and manipulate, right? Push prices up, draw prices down. We know that. How do risk assets behave? So this is great here. This is all of the previous cutting cycles back to the 80s. This account right here on Twitter, it's great info. What do we have? So the size of the first cut, 25 basis points to 50 basis points. But the reason for the cut, right? Normalization, panic, recession, essentially those three things. So what happens to risk assets in the time after that? This is the S&P 500. So, a good proxy for risk assets. In the 1 month, obviously the price not going to move that much, right? But you can see there's really a bad move when you get recessions. So the 90s recession, 2001 and 2007, the real recessions where banks just say no more credit, right? We're insolvent. We're not going to produce any credit. Risk assets tighten up. That makes total sense. They're not good for risk assets. You can see the 01 and 07 recessions, pretty bad for the market. Most other rate cutting cycles are mostly positive for the market. Take it 6 months out, you've got mostly positive returns, right? So if you have a normalization cut, you're actually 6 months out, you're up for risk assets. If there's a panic, you're up for risk assets. And if there's a real recession, then that's not good for the market. However, after 6 months, recessionary cut, you're down 12% and 14% for the S&P. It's a pretty big move for the S&P. But in crypto will go down a lot more than that. But yeah, we've been through many 70+% drawdowns in crypto. We're here for that journey. So rate cutting cycles are generally positive unless you get a real large worldwide recession. However, what do you want to be in during that? So yeah, Bitcoin would go down in price if that happens, if we get that. But what else is going down in price? The stock market, housing, right? Everything's going down in price. So if everything goes down in price, then really the thing we need to know is, what is our purchasing power? If we hold Bitcoin, is that going to lose a lot of purchasing power versus the other things that we want to buy? Why is Bitcoin down? Well, it's because the price level of stuff is coming down. So if we price everything in Bitcoin, then Bitcoin can go down in the dollar price. But if everything else comes down as well, do we actually lose purchasing power? So look, you may do short term because Bitcoin is more volatile. So it's going to get sold off as people go into dollars or their fiat currency, because that's what they have for their liabilities. They need that currency to meet their liabilities. But with investments, we should be looking, because it's a savings technology, Bitcoin, and so is the S&P, so is the NASDAQ index. These are savings technologies. The money in there, we shouldn't need for, at least kind of 4 to 8 years. And of course, in recessions, that's when people get panicked because they're thinking, I didn't think I needed that money for 8 years, but now I kind of do. And that's where you get those big drawdowns. In any case, as long as we manage our portfolio properly, we have enough cash, right? And we look at the market. It doesn't look like we're going into a massive worldwide recession. We may be, but they're starting to cut already, right? So look, rate cuts are mostly positive for markets unless you get a huge recession. But what's going to happen in a recession? We know that they're going to debase the currency, print. And so that eventually leads to higher asset prices anyway. So I think if we manage our portfolio, you have to be in assets. You can't be in the fiat currency. So that's it. And this rate cutting cycle, if it's normal, it's going to be pretty positive for risk assets. I want to focus on pricing everything in Bitcoin, which is the real way to price the cost of goods and services in the economy. We can't price those things with the fiat currency that we're forced to price them in because it's legal tender in our countries. And so we're forced to value housing and other goods and services and wages in these currency units that are being debased when they are created by banks. So bank creates currency units, gives them as a loan. So that's credit. It's not actual money. It's just a credit or a contract between the bank who creates an asset and then they put the liability on your balance sheet, right? That's currency creation, more currency units. Now we price housing in that because actually the house is a mortgage, which is a contract between you and the bank, asset, credit, liability. We shouldn't measure our effort, which is our wages, in that currency. We should measure wages and savings and value in a neutral currency that isn't used to create credit, which is Bitcoin. We measure everything in Bitcoin, and we find that the free market is driving the cost of output down. So goods and services get cheaper as we invent ways to make them for less energy input, right? Like farming, construction materials, right? We, to make 1 unit of food, we put less human man hours or energy into that 1 unit of food than we did 100 years ago because of automation and economies of scale. Now everything's more expensive because we're pricing it in currency units that are expanding. We need to price all of this stuff in a neutral currency, which is Bitcoin, right? So when you get doomers, and I agree with this, look, house prices are up and they go up and up and up and up. That's because the fiat currency system has to create rising prices to make previous debt cheaper, to debase the purchasing power of $1 that was issued years ago, to make the debt cheaper, to make that $1 98 cents, 97 cents. That's how the expanding system works. But it forces the government and the central bank to push stimulus into the economy to force prices up, and that creates inequalities. That's the real issue. Because house prices are up. Well, that's good for house owners, but it's bad for young people who aren't seeing the wages push up as high. That's the inequality. So medium house price is up nearly 50% in big red letters. Well, if you own a house, good news, right? But if you're young and you don't, that's the issue. Also, you have to look at wage adjusted prices, right? Because wages go up as well. And what we know is that wages haven't gone up as fast as the price of desirable assets because they're pushing stimulus into the economy. It's creating asset price inflation. So how do we measure all of this in a neutral currency? Look, what are your choices, right? Property, S&P, NASDAQ, Bitcoin. So let's price all of that stuff in Bitcoin and not fiat currency. So this is a REIT, real estate investment trust. This is a US company. It's listed on the S&P. It invests in residential properties located in and around dynamic cities that attract affluent long-term renters. And that's the type of thing that you would want to own, right? Like if you want to own a good, high-quality piece of real estate that's rented out to affluent long-term renters, this is desirable real estate. So let's have a look at the price. over the last few years. Hasn't gone anywhere. This is valued in dollars, remember, that over the last few years have increased substantially. So the amount of currency units, remember during the pandemic, they increased the currency units by like 40 to 50% in a couple of years. This thing valued in those currency units is flat, right? Hasn't gone anywhere. That's the price appreciation, right? We're talking about literally nothing, like no returns since 2016. So that's not good. Now you've got some rental income here. So you say, well, I've got some rental income. Well, let's value this in Bitcoin and see actually what the real price is, right? So we'll value property, desirable property in Bitcoin, right? It's literally gone to zero. Now you may say, well, Bitcoin was small, and so I get that comparison, maybe not good, but over the last, few years, right, since May 2020, since the pandemic and the money printing, it's down 94%. Desirable property rented by affluent renters in good, desirable cities is down 99% versus BTC. We can also value single family homes against BTC, something that every one of us would desire to have. But why are they priced so highly, right? In these currency units, a house is maybe 1 million currency units in one country. That same house in another country would be valued at like 10 billion currency units, depending on the country, right? These currency units are irrelevant. They don't mean anything, but Bitcoin as a neutral currency does. So again, this is single family homes around the US. You can see here the locations, right? So this is the index. This is INVH. So again, let's take it from, the pandemic. The prices, up a little bit. We're up, 15% over 5 years. That's not good returns, right? 15% over 5 years is really not good. But you are up a little bit, and you've got the rental income. However, the currency has been debased by at least 40 to 50% in that time. And you're up 15% in those same currency units that you're measuring it in. There's something going on here, right? So let's again measure it in Bitcoin. Again, over the last few years, down 84% valued in BTC. So Bitcoin is accurately pricing what these things should actually be worth, which is way less, right? So we are gaining purchasing power just by creating value and wealth and storing it in a currency that can actually accurately price the real cost of goods and services, what they should be, and not them being pumped up in this fiat currency system with debasing currency units. The halving cycles chart at the start of this video shows that we've still got a long way to go to any potential top in this short-term macro cycle. If you're investing or if you're really saving, you're looking for much longer time periods. So as we move into the kind of mature end of this bull market, then your P&L is going to look really great if you've been dollar cost averaging through the bear market. Of course, high prices is never good, right? I mean, you want the lowest prices possible. But if we measure Bitcoin over the long term in other assets that we can invest in, right, then it's outperforming them. That's, I think, what we need to focus on. The dollar price is going to be very volatile because dollars are very volatile, actually. That's what's creating volatility, right? It's people saying, I want to get in and out of this currency because we have to pay liabilities in the currency, right? But then they debase the currency. That creates the volatility, not Bitcoin. Bitcoin is just a neutral currency that just produces blocks every 10 seconds. It's actually not volatile, right? It is what we think of that thing in relation to the fiat currency that we're buying and selling that creates volatility. In any case, with Bitcoin, if you have at least a 4-year time horizon, then that smooths out the volatility and it takes the volatility away. So if you're dollar cost average for at least 4 years, right, what you get is this line. This is a 200-week moving average. This isn't volatile, right? It just goes up very smoothly up and to the right. That is the price of Bitcoin, right? The day-to-day stuff, when things get really overheated, right, then we can make some decisions about, do we need to pay some liabilities? But if you're just a saver, that's the price of Bitcoin over time. 200-week moving average, right? Every week for 200 weeks, your current price, right? 35,000, right? So that's the price of BTC. Now, when you look at the dollar price of BTC, right, it's really volatile. Is it Bitcoin volatile or is the currency volatile, right? And so whenever we get down here, this is a great time to buy. Again, we're not really at a cheap Bitcoin price in terms of dollars now, but we're not really overheated. When things go red, look into Bitcoin. It's free, by the way, so you can see this chart. When things get really overheated, you can make some decisions about, do I have liabilities that need to be met in the next 18 months? And I can sort those out, right? But other than that, it's just, if you've got spare stuff, if you've got spare value, save it, right? Over the long term. And Bitcoin is pricing in the debasement of everything else. Bybit deposit bonus linked down below. I'll also be updating the crypto course this month for crypto course members. That's free for you guys, but I'll link that down below if you haven't got it yet already. I'm James, it's MyZG. Cheers for watching, and I'll see you in the next one.